Hello and welcome back to the OBR Top Stocks to Watch for the week of August 22nd. Let's get right into this week's video. As you can see on our screen here for our economic drivers in this upcoming week, we just have a couple of news events as we did not have much in our last week, so obviously we have to fill up this week a little bit more. We have nothing on Monday. We are starting off Tuesday at 9:45 a.m. Eastern Standard Time with our Flash Services PMI number. Nothing on Wednesday. Thursday, we have 8:30 a.m. USD news for prelim GDP numbers, and it is day one of the Jackson Hole Synopsium. Friday, we start the day off with 8:30 a.m. Eastern Standard, again, USD news when we have our core PCE price index numbers, and 10 a.m. news when Fed Chair Powell speaks. Day 2 of Jackson Hole Synopsium is also on Friday, but that is it for the macroeconomic events in this upcoming week. And as you can see on screen right now is our earnings in the S&P 500 for this upcoming week as well. Moving directly into our technical analysis for this upcoming week, we have quite a bit of news that we need to go over. So the first thing that I wanted to touch on was the fact that we did recently bounce of our 200 daily moving average on SPY. This is a pattern we actually saw play out back in 2008 in that bear market, and it is very, very common for us to experience these bear market rallies where we have large percentage increases off of our lows. So as of right now, we've had multiple 9+% corrections, and right now we're up around 17%. Back in 2008, we had two 26% corrections when we had some multiple 9% corrections as well. Again, bear market rallies, so very similar to what we're seeing right now. That being said, I am bearish moving into this week just due to the fact that I think we're going to come lower off of this 200 daily moving average, if not to make new lows. I think we will at least be coming back down into the 417 to 407 range, and you'll see this kind of play out very similarly on everything that we have to go over in this upcoming week. So that brings us into Apple. Apple is in a very similar situation. Obviously, we've had an incredibly strong run-up in Apple since our lows that we made here at 130, 129 really, and we since then have bounced off of some resistance here with a large wick to the upside on our 4-hour chart, and we are now seeming to make our way lower. I'm again looking for some very similar price action that I was just talking about on SPY, looking for a move back down to at least the 166 range, 165 range, if again not lower. We can fill this gap down to 157, so worth keeping an eye on that. But overall, going into this week, definitely looking at a more bearish position. At the end of the day on Friday, we did break beneath some structural support, so I think that we will likely continue to move lower. QQQ is going to look obviously very similar to SPY and Apple that we just went over. We now are looking to fill this gap down at 317.40. That's really the primary area of support that I'm going to be looking at for this upcoming week. I do think we could fill that quite easily, so if we do, and we decide to continue to move lower, I'm going to keep my eye on support levels around 312, 313, and again right here at 307, 308. Should we decide to resume our trend, we have some resistance above us at the 340 range. But again, I do not think that is super likely moving into this week. Tesla is a rather interesting chart. We just had a double top on Friday and came lower off of that. I do think that it is likely that we can bounce off of these levels, but I also think that it's definitely in the cards for us to come down to our multi-month consolidation high before bouncing. So again, this idea with us coming back down to our multi-month consolidation high around 781, 770 flat pretty much, that would coincide with our outlook on SPY, Apple, and QQQ. So going to keep an eye on that, but again, I think that Tesla does look better, a little bit more bullish than the other names we've so far gone over in this upcoming week. Bringing us over to oil, we know we have to touch on oil. We've been chopping pretty much sideways from our ideology last week where we had this retest and a confirmation and a push lower. I expected us to continue that move. We did not quite yet. We are bouncing up here, but I do still think that the downside is much more favorable for oil and therefore energy stocks. So still looking to make some plays on energy stocks, absolutely. Taking us over to NVDA, we did not yet break our inverse head and shoulders pattern with the breakout of this neckline at 191. We are now bouncing lower, and I think that until we break above this, this pattern is not yet validated. So we can technically come all the way down for our right shoulder down to 140. As long as we do not break 140 and we come back up and break this neckline, then this inverse head and shoulders is in play. So this downside movement will not really change this ideology, just keeping an eye on this going into the upcoming week. Something also worth noting in terms of the semiconductors is AMD. AMD recently on Friday afternoon of this last week broke out of this intraday wedge that we had for the last couple of days, and due to this, I think that a retest of this zone that we just broke out of confirming this support as resistance, and a push lower is likely, if not just a straight continuation to the downside. So yeah, absolutely looking for perhaps a retest of 96.80. If we get beneath 94, then a continued downside movement is incredibly likely. I hope you guys enjoyed. I hope you guys took something out of this video that is beneficial to your trading in this upcoming week. If you did enjoy it, please like and subscribe. We greatly appreciate it. And as always, on behalf of everybody at OBR Investing, happy trading, and we will see you in the next video.